Hello, my name is Eddie Tofik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat.
Paris milling wheat. For another week, Paris milling wheat has some very different patterns when compared to Chicago, Kansas City and Minneapolis wheat. Here there has been one continuing dominant pattern, a quite large pattern that 5 weeks ago took a break on the downside. It is of course the dark blue highlighted late August 24 to late February 25 ascending triangle. This pattern had the requisite 5+ touches and is made up from a lot of smaller patterns within it, but it can clearly be seen on my daily chart. 6 weeks ago I laid out targets below for this pattern, and I quote, primary target X would be in the 226 zone, for secondary harder to reach target X1 down in the 194 zone. End of quote. 5 weeks ago the market reached the primary target X, pushing down below it. We had a stall in the movement lower during the first part of March, prompted by the market trying to test down to the 50% absolute Fibonacci line at 219. This support, apart from its obvious significance as a 50% absolute Fibonacci line, had importance because it helped hold up prices back in November and early December last year, and also eroded the bearish incentive back in August and September as well. The reactionary rise only managed to move up to the declining long moving average, currently at 228, not even testing it, but rejecting further upside pressure, and will drop lower more or less ever since, such that we are today at lows not seen since late August last year. Anyway, 5 weeks ago I amended the further targets below into target X1 being at 205 as a secondary hard to reach target, and target X2 being a tertiary target, an even harder to reach target down at 194. During that time the primary target at 226 was reached, as I've mentioned earlier. 3 weeks ago I asked a question, I quote, "The question still remains as to whether prices will take this time to form a possible bearish halfway hesitation, or will they recover further. The latter seems unlikely right now, and the former, well, it's too early to say, though it might comply with what is going on in the other grain markets." End of quote. Comply? Well, comply it did, as we've dropped down through the 50% absolute Fibonacci line and shown a new close-in target X4 for the bearish halfway hesitation down in the 206 zone, which I have since finessed to the 208 zone. This is the most immediate opportunity on the downside. Minneapolis wheat. Since mid-February, the market has taken a 5 steps down and 3 steps up and repeating, or trying to repeat process, gradually narrowing the range and possibly creating a sideways pattern type, currently 597 to 631. It's not a great looking pattern by any means, but it still does exist. Today we are resting on a combination of flatlining green short medium moving average, currently 617, and a gold long moving average, currently 615, and pressuring on the top side the February to date bright red downtrend, currently 625, and not too far from the dark blue March 23 downtrend, currently at 631. If this pattern is to hold out, I may very well have to finesse these trend lines or even abandon and retire this pattern. I'll wait and see on it, though I do acknowledge a chance for a February to date possible double bottom pattern. However, I would also should point out, as I said 4 weeks ago, and I quote, the flatlining green short medium moving average and a very slowly declining medium moving average, these two along with the short moving average currently at 582. By the way, the medium moving average is currently at 611. These two, along with the short moving average, are right now forming a bow tie formation crossover. The moving averages are not in the right order, but are most definitely forming a bow tie pattern, with right now some slight bearish overtones, though this course may change. So what have we got to look forward to is in between 15 to 20 sessions from today, so between the 4th to the 10th of April. Look out for one or more of the following: a change in trend, a reinforcement of a trend, and volatility. End of quote. Well, today we are one session over from the window described, and we really hadn't seen that much until now. So I'm wondering if the possibilities are, how shall I say this, that this is actually arriving late, or if they may not arrive at all. Right now we seem to be moving towards a possible double bottom scenario. I'm wondering if that will include this sideways triangle or not. Right now, it seems not to wish to do any of these things in the absence of anything else. I'll just keep that eye on that sideways triangle, especially the dark blue downtrend. London UK feed wheat. There continues to be here on this daily chart, even now, these mini months, only one major significant pattern here, and that is the bright red late May, early July 24 bearish shift pitchfork. The market has recently reasserted the prominence of this pattern with prices breaching, then repairing an attempted break higher over the bright red upper time. It's currently at 177.15 back in late January and early February. Add to this the earlier this year narrow mix overhead of all the moving averages that are now separating out, as well as the 50% absolute Fibonacci line at 180.5, and you have, I suppose, and still suppose, a close together compacted area overhead that, as I've repeatedly said for months now, that had been brewing up for a significant move, which has seemingly happened or even started to happen over late February and into March. It was, as I said, 16 weeks ago and ever since, and I quote, "Even now still looking for that better pattern to appear, and until that shows up, I will continue utilizing the bright red bearish pitchfork." End of quote. So my actual point is this: the bright red bearish pitchfork, the bright red bearish shift pitchfork, has turned out once again to be the pattern I was looking for all the time. This leads me to my final 4 points, and 3 of them are something that I noted in my recent annual commentary on London feed wheat, which is actually not that recent, it's the beginning of the year. Firstly, I saw the potential for a very large May 23 to date cat's ears pattern. This is a bearish pattern, akin to a double top, formed after a big fall, such as the fall we had earlier in 2023, as well as an even longer term second pattern, an August 2020 to date very large head shoulders top pattern. These 2 super long term patterns are still live, and they both rely on one feature, that is their common neckline, highlighted in dark blue on my daily chart, currently at 167.60. For most of March, prices had been sliding along the top of this support of these pair of dark blue necklines, all at the same level. However, recently we dipped and then retreated back up again, even for 2 weeks ago, closing with a compound weekly key reversal down there from 2 weeks ago. That did not follow through lower though. However, this idea still hovers over the market. The third feature is a little more longer term. It is the March 2016 to date recently finessed uptrend. It's highlighted in purple on my daily chart. That's currently at 168.25. The last few weeks we had the market pressing and reinforcing the dark blue necklines and the purple uptrend. However, despite closing below it, we have not seen a follow through lower. At the same time, we also have the May 23 low at 168 even, which added its support, however limited that May support had been. Sorry for the pun there. As it's been previously breached to these 2 necklines and the purple uptrend. Now, as I've said repeatedly, there was one major, possibly severe criticism of these 2 necklines, and that is they had previously been breached and some would argue broken. However, I counter that by saying I transpose these from my longer term monthly charts, and whilst on a daily and even a weekly chart they may appear breached and broken, on the longer term monthly charts where they really live, they are still somewhat valid, and so I will not take these as cast iron lines in the sand that should not be crossed, but as longer term strategic patterns that we should bear in mind and occasionally bring a closer eye upon, such as now. We did have a monthly close below all these at the end of March, but it was only 1 month, and it was only just. Now, let's look to the top side, and we have closing in from above, the green short medium moving average, currently at 174.05. The mauve medium moving average, currently 176.70, and of course the bright red upper time, currently at 177.10 of the bearish shift pitchfork. These will impact the market levels by the latest late summer, so it's worth getting prepared for the impact, because the world will change at that point with this major pattern that's been running here since last summer.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Toftbeek and ADM Investor Services International Limited. And here comes the final important bit.